Welcome to the Deep Dive. Today, we're tackling a story that is, well, it's one of the most intellectually compelling and, let's be honest, financially punishing stories in the Layer 1 space.
It really is.
What happens when a blockchain project does everything right? I mean, actually achieves that holy grail of institutional adoption, but the market just completely rejects it.
And that's the core tension we're unpacking. We are diving into ICON, or ICX. This is a network that was built from the ground up on the idea of interoperability.
Right.
They were all about connecting real-world systems to the blockchain. But now they're in the middle of this massive fundamental shift. They're pivoting away from those enterprise roots to try and become a real DeFi contender.
It's basically an admission that the old model, even with all its successes, just wasn't working.
It wasn't sustainable. Exactly.
So this is a huge high-stakes move. We've gone through the sources on Icon's tech, its unique governance, the insane market history, and most importantly, this enormous rebrand to SODAX and the Sonic chain.
And our mission here is to put all those pieces together for you.
Yeah, to give you a clear roadmap through what is, frankly, a very convoluted transition. Okay, so let's start at the beginning. Icon's whole identity, it wasn't about being just another Ethereum clone. They had this goal of building the Icon Republic. What did they even mean by that?
Well, the vision was to hyper-connect the world.
Yeah.
And that meant linking all these, separate crypto chains with traditional institutions.
Like who? What are we talking about?
We're talking government bodies, hospitals, universities, banks. They were going for deep regulated integration, which really gives them a unique history compared to almost any other Layer 1 out there.
And their big differentiator, their big success story was in South Korea. We're not talking about small pilot programs here. What did they actually get done on the ground?
The institutional partnerships were pretty significant. They helped develop blockchain-based decentralized identity systems.
So like a digital ID.
Exactly. Yeah. Including actual digital driver's licenses that citizens could use. They lock in collaborations in insurance, healthcare, finance. I mean, the sources even mention Korea's largest gold exchange.
Wow.
And Line, which is Asia's biggest messaging service, they use Icon technology to build out their own chains.
Okay, but hold on. Maybe adoption is the wrong word here. If they had this level of government and institutional buy-in, why is the token price where it is today? Weren't these partnerships just, subsidized test cases that didn't really generate any meaningful network traffic?
That is the absolute critical insight.
Yeah.
They achieved the credibility, for sure, but they never got the network effect. They never got the fee revenue they needed to make their original token model work. Their focus on enterprise, it kind of insulated them from the high-speed, high-volume retail DeFi market, and the market punished them for that isolation.
So to make all this institutional connection happen, they had to build their own tech. Walk us through the backbone that made all this interoperability possible.
The key piece of the puzzle is their blockchain transmission protocol, or BTP.
BTP, okay.
Yeah, and you can just think of BTP as Icon's own trustless, decentralized framework. It was built specifically for cross-chain transfers of, both data and tokens. It was the bridge connecting chains like Ethereum, Avalanche, and Cosmos back to their ecosystem.
And on top of BTP, there's a system called XCall.
Correct. XCall is more of a general message passing standard. It's what allows dApps to actually operate across multiple chains, which basically made Icon this central data hub for all its partners.
So they had the pipes, the BTP, connecting government and finance. But what kept the machine running? I mean, before they decided to rip it all out, we have to look at the engine room, the governance, the tokenomics, what paid people to keep the lights on.
That whole system was called Delegated Proof of Contribution, or DPoC. It's a governance model where ICX holders stake their tokens to vote for what they called public representatives, or PREPs. These PREPs secure the network. They proposed changes. And the contribution part meant that rewards were supposed to be tied to actual development work, not just how much money you had staked.
And the ICX token itself, that was running on an inflationary model, right? It was designed to get people to participate. How was that supposed to work?
The annual inflation rate was fixed at 3.99%. The idea, and it's a sound one in theory, was to balance this out with network activity.
So transaction fees.
Right. Transaction fees, all paid in ICX, were pooled together and then used to basically cancel out that inflation. The theory was, if network usage went through the roof, the fees could make the network supply neutral or even deflationary.
Which, given the price action we're going to talk about later, suggests that mechanism never really kicked in.
The volume just never got there. That's a fair conclusion.
Yeah, it never counteracted that 3.99% inflation rate.
To keep it all secure, they also had something called PREP bonding. The P-reps had to post a bond, like a security deposit, of 5% of their total vote share to get their full rewards.
Skin in the game.
Exactly, skin in the game. It was designed to guarantee they'd be reliable and to discourage bad behavior, because if you messed up, your bond could be slashed.
They also had a growth budget built right into the system, the contribution proposal system, or CPS.
Correct. And the CPS is pretty unique. It's a decentralized grant fund, and it was funded by 10% of that annual inflation.
So quite a bit of money.
Yeah, it came out to about 300,000 ICX a month, all dedicated to growing the ecosystem. It shows they were serious about internal development, even if the projects that came out of it didn't, attract massive retail liquidity.
And for everyone else, the stakers and voters, 77% of that inflation went to them as rewards. We're talking around 6% to 7% a year. So that was the foundation. Complex, enterprise-focused, governed by DPoC. And now, the pivot. So after years of building this really integrated, complex architecture, ICON just announces this radical shift, the rebrand to SODAX and a full migration to something called the Sonic Chain. What is the fundamental reason for just abandoning all that work for EVM compatibility?
I mean, in a word, market necessity. Their complex non-EVM architecture and that focus on slow-moving institutional deals, it was just seen as incompatible with the kind of fast-paced growth you see in DeFi.
So they're chasing the developers.
They're chasing developers and liquidity. The shift is all about modernization, streamlining, and, crucially embracing EVM, the Ethereum virtual machine. They're trying to attract the talent that just flocks to the simplicity of the Ethereum standard.
And this also means a huge change in tokenomics. They're ditching that complex inflationary ICX model for a new token, SODA.
Exactly. The old ICX had around 1.0 billion tokens circulating under that inflationary model. The new SODA token, on the other hand, is going to have a fixed supply of 1.5 billion.
Which seems a lot simpler.
It is. Moving to a fixed supply shows they get that, retail DeFi investors prefer predictable models over these complex inflation and deflation mechanisms. They're sacrificing that complexity for market appeal.
So now the entire project, the entire investment case, it all comes down to the execution of this migration. This is the real tension. What are the immediate risks that the sources point to with this token swap?
The risk is immense. It's planned as a simple one-to-one ICX to SODA token swap, but the execution is completely dependent on centralized exchange support.
CEX support.
Yeah. If they can't get SODA listed seamlessly, that's a catastrophic risk. Historically, the Upbit exchange in South Korea has controlled a massive percentage of ICON's trading volume. So getting confirmation of the Upbit KRW listing for SODA is probably the single most critical thing to watch.
If the big exchanges don't play ball, the whole project is dead on arrival.
It starts without its historical liquidity base.
Exactly. But if they can pull this off, if they manage this incredibly difficult transition, what does the new platform SODAX on the Sonic chain actually promise to do?
Well, they're targeting very efficient intent-based swaps across 12 different chains. The sources are highlighting some extremely competitive features like fees as low as 0.2% and settlement times of just 20 to 30 seconds.
That's fast.
And looking forward, their big milestone shows a complete pivot to the money market. They're planning a cross-chain lending interface for Q1 2026. That shows they're really committed to plugging their old BTP tech directly into high-value DeFi.
All right, let's just put the volatility into perspective for a second. The all-time high for ICX was over $13.
$13.16, I believe.
Compare that to the current price, which is bouncing around 8 or 9 cents. That is a 99% correction. That's not just volatility, that's a market verdict. What did the market fundamentally reject about their original vision?
The market rejected the lack of fungible liquidity. It rejected the slow pace of institutional progress. That price collapse is why the current sentiment is just so bearish. I mean, the technical analysis we saw shows the fear and greed index sitting at 29. That's firmly in the fear category.
And now they're trying to jump into this incredibly crowded interoperability market. Who are the big rivals for the Sonic chain?
I mean, they're going head-to-head with giants. Established high market cap ecosystems like Polkadot, DOT, and Cosmos, Atom. Not to mention the pure infrastructure plays like Chainlink, CCIP, and Layer 0. It's an enormous challenge in terms of developer mindshare and funding.
Right, but We can't ignore their one unique advantage. They have a live, proven technology in BTP. And, crucially, they have that established real-world adoption track record in Asia.
That's their ace in the hole.
That institutional credibility, if they can somehow leverage that into their new DeFi model, that's something their rivals just don't have.
And that track record is why you see some of this extreme long-term speculation. Some of the sources we looked at are forecasting average prices hitting, get this, $63.97 by 2040, and even $85.44 by 2050.
Whoa.
But we have to be crystal clear. Those numbers are based on them achieving their absolute maximum potential. It's pure speculation.
So if we strip away all the history, the sources are basically telling us that the entire investment case now boils down to a single point of failure or success.
Precisely. The fundamental investment case today is a speculative bet on the successful execution and rapid adoption of the SODAX rebrand. They're shedding a successful, stable, if slow business model for high-risk, high-reward gamble in DeFi. Hashtag outro.
So what does this all mean for you? Icon is a compelling, maybe even a tragic case study. It's an established enterprise blockchain that actually achieved real adoption, but then had to make this radical pivot to try and survive the demands of the modern EVM and DeFi world.
It really highlights a difficult reality in crypto, which is that having amazing technology and real-world partnerships, it's just not enough if the market perception and your tech modernization fall behind. They have strong fundamentals from those enterprise roots, but the entire project's future is now tied to executing this complicated token swap.
And attracting a whole new wave of developers to the Sonic chain.
That's the challenge.
So here's a final thought. Given Icon's historical success integrating with systems like hospitals, government agencies, even gold exchanges, what is the long-term impact on global finance if this new Sonic chain can actually marry that enterprise credibility with cutting-edge DeFi technology, like that money market plan for Q1 2026?
It's a huge question.
For now, though, keep your eyes on the critical immediate metric.
Yeah.
The centralized exchange listings for the new SODA token, that is the first and maybe the biggest hurdle they have to clear.